Let's take a look at the latest data that we've seen, quarter three. We've got a slight return to positive growth when we look at the average prices in the commercial property sector, but an increase in vacancies. How are you reading the health of the sector?
Yes, if one looks at our commercial property price index, it seems to very much track the residential one with a slight bit of a lag. And towards mid-year, you had a mild recovery in year-on-year growth in residential, and the same happened to the commercial price index too. But one needs to look at the underlying fundamentals for signs of weakness to come. And one of them is our all-commercial vacancy rate index on properties that we finance at FNB Commercial Property Finance. And there we've seen a rising vacancy trend in that index. That would point towards some sort of weakening or downward pressure on rentals, and you would think that the capitalization rates as a result, if we are looking at increased expectations of weaker rental or income streams, you would expect capitalization rates to rise, and that could put downward pressure on capital values, at least in real terms, as 2012 approaches.
Let's just break the data down into the various segments of the commercial property sector. We've got obviously office, residential and industrial. Industrial appears to be holding up relatively better than the likes of the office sector.
That's an interesting one because that's linked to manufacturing partly, and manufacturing has recovered significantly since the recession, but hasn't really even got back to its pre-recession levels. On top of that, you've had significant amount of building activity, but yes, we have seen that while retail and especially office space vacancies have risen, according to IPD data earlier this year, industrial has bucked the trend, and you have seen a mild vacancy rate decline. I'm not convinced that will hold, though. Should the economy weaken as I anticipate, manufacturing normally is negatively affected by global events or negative global events, and I would expect that vacancy rate would also rise, though.
How are owners of commercial property responding to this? As you say, some downward pressure is likely to come with regards to rental income. What are they doing? Are they reducing the income? What is their response?
Well, yes, I think the feedback I've heard from some of our clients is that landlords can't just heap the rental increases onto tenants these days. The tenant sector, there's a significant amount of financial pressure there. They're having to absorb significant costs in terms of electricity and other municipal rates and tariffs. So it's not just easy to pass a lot of cost increases and rental increases onto the tenants at this stage. So low rental growth. There has been some mild return to positive growth in industrial property earlier this year, a rental growth on industrial property in response to a decline in vacancy rates, but by and large it's a pretty flat rental market.
From a property valuation perspective, we know that the residential property had that boom and it has come back quite significantly. Is this the same for the commercial property market?
Well, I think commercial trends pretty much track residential trends, but they're not as extreme. I think commercial's in a better space. Yields on commercial property are generally higher than my perception of yields on residential property. That's to be expected, because if you look at price growth from 95 to 2010, residential was in the order of about 600%, whereas commercial was more around about 450%. Not quite as extreme, not quite as bubbly, as you may. And so while I think there is we are going to see in these weak economic times some real capital or value decline in commercial as well as residential, that need not be as extreme as the residential case.
So not as extreme. As you say, there is that close correlation, though, to what's taking place in the residential property market. We've seen prices there starting to track lower. The SARB's leading business indicator also falling back. This doesn't bode well for 2012, especially in light of what's going on in the developed economy. Manufacturers will be affected by that, and thus the industrial space. So overall, the outlook is it gloomy? Would you describe it as gloomy for the commercial property sector?
Well, it's a weak one. I think it's for people who have been in property for a long time. This is nothing abnormal. You get, as a rule of thumb, the average cycle is roughly 15 to 20 years. You have a boom time for maybe 7 or 8 years, as we did, and then you have a lengthy period of stagnation as a lot of the excesses are unwound or eliminated. So it's nothing abnormal. Obviously, the troubled global situation can make matters a little bit worse, but property cycles by nature are very long cycles, and that's the nature of the beast.
Is the cycle in the commercial property space different to the cycle in the residential property space when it comes to returns?
I think, I think that the commercial property market tends to not get as carried away in boom times. There's a more savvy or seasoned investor who generally, I think, looks more at income stream. So when yields get compressed too low, they probably stay out of the market more. So residential market gets a little bit ahead of itself. You had more capital growth, more yield compression, so there's more unwinding of that situation to do. So more extreme cycles perhaps in residential property, more stable in commercial, but the cyclical direction, I think, over the long term is pretty similar, yeah.
From F&B's perspective, what is your strategy? Are you renegotiating loans? Are you what are you doing to help cushion this property owners during this period, specifically, of course, in the commercial space?
Well, we've actually got quite a healthy book on the commercial side when it comes to commercial property specifically. So nothing much. I mean, all I can really say on that, I'm not the head of credit, but all I can really say is
are you becoming more risk averse with regards to lending out?
I don't think the pullback in the commercial space has been nearly as dramatic as what it was in the residential space. 5 years ago or so, the residential property lending was probably a little bit too bold or aggressive, but by and large on the commercial space through the cycle we've done very well with our arrears rates. Nothing much to worry about on that side. So the reaction has not, but yes, in tougher economic times since the boom years, you can expect some sort of more conservative approach, but it hasn't been the massive pullback that it was on the residential side, I don't think.